Alright traders, I'm back again with another video, and today we're going to take time to look at what's on the horizon for the upcoming week, see if there's any trading opportunities, and see what we need to look out for and be aware of. Last week was a pretty good week of trading for the dollar pairs and the yen pairs. Both of those pairs had some nice moves. I think both of them are overextended right now, so you might not find much in regards to those pairs, waiting for the pullbacks to see what happens. Now, I was in the US dollar yen pair last week. I was in a trade, and I posted that video on YouTube and showed you guys the trade I was in, and I lost that trade. Now, my train of thought was that since Obama signed into law the bipartisan deal to end the government shutdown and avoid being in default, that the U.S. dollar would show some strength. But little did I know that the very first day that government was able to borrow money again, they would break a record and borrow like $328 billion the first day. So they broke a 2-year record, which I guess previous record they broke that by almost 100 billion, I suppose. So what we're looking at here is the US dollar yen pair on a monthly time frame, and I'm looking at this monthly time frame because it's kind of important to see some things here. The market moved all the way down to this low here. Now, I suppose there was trading with the Forex market probably started in like 1991 or somewhere in there. So you could see on the chart, this is where it comes from, showing the very first time you can trade a Forex market here. I suppose is 1993 this is showing. So back in 93, this is the lowest low that this pair has been to, and basically that's hitting in at what's the low here, 75,555. So that's the low right here, but the market bounced off of that low and is progressing steadily higher. Now you had this move here, you see all these months of green candles, and then you had a little bit of consolidation with this flag pattern. I kind of expected, like after you got the bounce here off of this top of this Kumo here, which was acting as resistance probably around 100.20, somewhere in that area. Looking at support at resistance there, I thought that we would get a pullback to the 50% level, which would be this Kijinsen right here. So we didn't get that pullback all the way. We got some consolidation and got into this flag pattern. So we want to break this level here of the Kijins of the Kumo, of the monthly Kumo. So I'm going to put a line here so you guys could see that level that we're sitting at. And all my lines are color coded, and basically I put dash lines for monthly time frames. Now I want to see that when I go down to my lower time frame, because I know this is going to be strong resistance for me. We want to get above that level. That would be a good level to break, and then we see there's nothing hindering us for a move higher. So we kind of expected this pullback or this consolidation, but are we going to pull back anymore, or is it going to break out of this level and continue higher? All right, so we want to go to the daily time frame, look at that. And on the daily time frame, you know, this is a mess to trade right now. You're not getting anything good, because you're getting these levels here. You see this triangle, this symmetrical triangle, and you get the symmetrical triangle with the market making lower highs and higher lows. So you see that here's a high, lower high, and then here's a low, higher low, higher low. Now what I expected last week when I took the trade, I expected the market to move up. The market was sitting at this level. I expected the market to move up and come to this level, because you could see what's happening. The market goes down, touches the bottom of the triangle, goes up to the top of the triangle, back to the bottom, to the top, to the bottom, and then I expected it to go back up to this top level here. Well, it didn't quite do that, so it pulled back, and basically off of that fundamental news there with the U.S. dollar and the opening of the government and all that money borrowing, and that made a big impact on the trade and made an impact on the U.S. dollar. So let's see what's happening on the 4-hour time frame. But looking at this daily time frame, you could see we're basically in this consolidated symmetrical triangle pattern, and we need to get above these levels. Now basically a symmetrical triangle is usually going to be, like I said before, it's usually going to be a continuation pattern. So when you get that symmetrical triangle and then you have this long run up, then you get the symmetrical triangle, you expect price to break out to the top and continue forward. Now that's not always going to be the case, so we can break lower and go back down. So we want to see where we are on the 4 hour time frame. That's the time frame that I make my trades on. Look at that daily pair, that the daily time frame, to really get some support and resistance, give you some good levels of support and resistance. Now on the 4 hour time frame, it's just nothing good here. You know, we're on the other side of this Kijinsen, and this Kijinsen basically acts like your trend line here. Now we're broke on the other side of that, but you can see we're holding support here at the bottom of this at the bottom of the Kumo here at basically about 97.56. So that held support right now. We want to see price get above this Kijinsen. If price can break up and get above this Kijinsen, then we can get into the long trade, and we'll look for this level here. You can see where the top of the symmetrical triangle is. So you have to draw your triangle and see where that level is, so that if you see that price breaks above this Kijinsen, we can get into a trade. Once price breaks above the Kijinsen, we can get into a trade and take that up to this level. Now if we don't get above the Kijinsen and we stay below this Kumo here, we break below this Kumo, then we'll start looking for the bottom of this symmetrical triangle. So we look to ride to the bottom of this triangle. So you need to get your triangle level in there, and that'll show you where your levels are, your targets are going to be. So we want to see what's going to happen here. Right now there's nothing. We're inside this Kumo, so that means we're pretty much ranging, nothing happening. We want to get below that level. Now you can see this level here, this is going to be, we got a lot of support here, so maybe this will hold and we can get back above this Kijinsen. What we have here is the bottom of the Kumo. The bottom here is the previous week's low, and then you got the previous month's low. Alright, so those levels are going to hold as strong support. If we break below that previous month low, I definitely would try to get a short trade down to this level here. Okay, but so we want to see what the market's going to do right now. It's no trade, nothing happening. These are your levels you want to get to. You want to get past, basically get past the Kumo here and get past the Kijinsen at this level. Alright, that's the 4 hour time frame. Let's go to the New Zealand dollar, US dollar on the monthly time frame. And we're looking at these monthly time frames because we're near record highs almost, or record lows. You could see first time trading open on this pair, looks like it's 93 here, right? Since going back all the way to 93, this is the high, and we're pretty close to that high right now. That high sits in at, what's that, at 88.41. So that's going to be the high, the all-time high for this New Zealand dollar, US dollar, and we're pushing up to that level. So you know that when you get to that level, that's going to be very strong resistance. All right, so we want to know that. So let's go to the daily time frame. And with the daily time frame, you could see this market was in very strong move upwards. You could see the momentum. Look how the Kijinsen is almost pointing almost straight up. You could see the market here. Look at the pairs, look at the candles. It's almost like a straight line up. Then you got that pullback, and then it started that straight line up again. Okay, so what we want to wait for now, there's not really much of a trading opportunity yet. We need some pullbacks here. We want to see the market pull back maybe to this level here. Okay, this level here is going to be your, this is also your daily Kijinsen right here. Well, we're on the daily time frame, so yeah, this is your daily Kijinsen right here. So you can see how strong that is. You see the pullback, and then we got to this level. I'm expecting the market to maybe pull back to that level, but if not, we're going to pull back to this level here. This is the previous month's high. Alright, so we broke that previous month high, and now this level may hold as support. Okay, so we come down to that level maybe, and then we take off again. So we can look for an entry at this level. And let's take this to the 4 hour time frame. And that level would be a very good target because it lines right up with our 4 hour Kijinsen. So that monthly level here, that monthly high, lines right up with that 4 hour Kijinsen. If we can get a pullback to that level, that'd be very good to take a trade here, a long trade, and ride that as far as we can. Alright, but if we violate this level, we'll probably violate this Kijinsen, which means we may see a change in trend. And then we're looking at here's your daily Kijinsen right here. So here's our 4 hour Kijinsen, here's your daily Kijinsen. So then we see this level. Will this level be violated? If that's violated, then you know we're probably getting through this cloud here. And then you could start looking for a short opportunity on your 4 hour time frame. But basically we're looking for a long opportunity because we're above the cloud. Everything is going to be bullish here, so we're looking to bounce off of this level, come back down to this level and bounce and go. Now you can take a trade on the break of these fractal levels here. You break the fractal and you take this level, but I don't want to be too far away from the Kijinsen because we're going to always want to get back in equilibrium when we pull back and get back to the Kijinsen. So I want to try to get a trade as close to the Kijinsen as I can. Anything that you're close to support. Now see here, you're not here you're not close to support. So the market, if you get into a trade breaking this level and the Kijinsen's way down here, you break this level, well, maybe the market doesn't go much farther because it wants to get back in equilibrium and get back close to the Kijinsen. So that's why I kind of wait for the bounce, and I miss some of these trades, and that's all right with me. I want to get a better trade, a higher probability trade where I have something behind me, which would be this support level. All right, so on the New Zealand dollar, US dollar, we'll wait and see what happens here. We want to get down to this level or close to that level, bounce off of that level, and then go long. We violate that level, then we wait, because if we violate that level, like I said, we're going to be looking to attack this level, this daily Kijinsen level, which comes in at 83.58. And if we break that level, we'll probably break the cloud too, and then that's when you start looking for your short opportunity on the 4-hour time frame. All right, pound Aussie for this is the monthly time frame, and you can see back here again, back in 2001, this pair with the pound Aussie, we're on a monthly time frame. This pair has bounced off of its all-time low, which comes in down here. Where is this level? Basically at 43.79. Bounced off of that level. You can see that level held as strong support. That's the all-time low here, and so we broke off of that level, bounced above the Kijinsen, and now we're inside the cloud. This is going to tell us we're pretty much ranging. This is the monthly time frame. All right, so the monthly time frame is starting to show signs of bullishness with an upward move here. We're not going to be totally bullish till we get above this cloud, but that's a long time on the monthly time frame here. So we go to the daily time frame. In the daily time frame, you can see we're bearish right now. We're below the Kijinsen, we're below the cloud. So what we're looking for here again, and this is going to be your daily cloud level right here. So when we go to the 4-hour time frame, we'll see that level, and we'll know that that level may hold as resistance because we're below that level. Now if not, we're looking for levels where this market could come back to. So we'll wait for the market to pull back to one of our levels or else break one of our levels. So we'll pull back. If we're going to pull back, we'll look at this level. This is going to be the bottom of the daily cloud. I'm looking at this level here. This is the bottom of the previous month's low. So we get above that level. If we get to that level, we may bounce on that level, and then finally coming all the way back up to the daily Kijinsen. So that will be a 50% retracement level right here, coming all the way back to the daily Kijinsen. And if it doesn't violate that level, then you would look for that short trade. Now that's the dollar. That's the daily time frame. So we want to go to the 4-hour time frame. Pound Aussie. Now on the 4-hour time frame, we're going to be looking for short opportunities. The daily was below the cloud, so we're below the cloud here on the 4-hour too, and we're below the Kijinsen. Now you can see all the way how this happens. We come through here. We come through the Kijinsen, broke that first level of support for us, which is our trend line, our Ichimoku trend line. We broke that level, broke below the cloud, and there's nothing to hold us back. So we retrace. We don't come all the way back to the 50% level. That's more like a 38.2 retracement level, and then the market takes off again. Now we come back right up to the Kijinsen here. When you get this pullback and you know you're looking for a short opportunity, you get that pullback, that first candle, then you get a close with a red candle. Now you want to enter the market here, put your stop loss above that Kijinsen. So this is the same thing we're looking for here. Now what I did Friday, I got this close right here, and I entered the market on this close, and then I took this down to here, and I got out of the market because I knew Friday, it was near the end of the day, and I wasn't gonna hold that over the weekend. That was just a little scalp trade for me. It wasn't a trade that I wanted to hold over the weekend. It looks like some of the momentum pretty much still have pretty good momentum, because look at the angle of the Kijinsen, and you can see it's pointing downwards. Now the market pulls back, and we're getting ready to pretty much, we are open, I think, with the market. All right, so I think we're open now. Yes, we're open, so there's trading opportunities, and what we're going to look for here is the pullback to this level now, and then once we get a candle confirming the pullback, we can take that candle and put our stop loss a little above the Kijinsen here. Now if we violate that Kijinsen, then we're going to look for the market to continue higher and then continue higher. You got this this previous month low here, and you got that daily cloud here, the bottom of the cloud. So we need those levels. We need to get through those levels before we can look for anything long. And those levels line up right with this Kumo here on the 4-hour time frame. So really, you don't want to look for anything long till you break that, get above those levels, and those levels are going to be the Kumo basically. So get above that Kumo, and you can look for a long opportunity. Right now we're looking for our short opportunity because the market's telling us, the bias of the market, everything is bearish on this 4-hour and the daily time frame. So what we would look for is a bounce off of this Kijinsen, as I said. Once we get we get a bounce here, we get the next candle red showing bearishness, and then we take that, put our stop loss above there, and we ride the trade. That's the pound Aussie. We'll go to the Aussie yen. This is a monthly time frame. Again, you can see the trading started with this pair. Basically looks like 1993. That's as far back as I can go with my software. And I'm looking here, the high, the all-time high, we're sitting near that level, not too far away from it, and that's going to be at 107.85. That's the all-time high here. So when you get to that level, just know that's going to be definite resistance. And I would probably take a short trade on that. Okay, but let's go to the 4-hour time frame. The daily time frame. Let's go to the daily time frame. Aussie yen daily time frame. We're looking for a long opportunity here. We're above the cloud, we're above the Kijinsen. Being above this Kijinsen, we're kind of looking, again, we want to see if we could get the market to pull back to this level. This is going to be the 50% retracement level. The Kijinsen usually is going to be the 50% retracement level of your move, of your previous trend and the pullback. So it'll always be that 50% retracement level. So we're looking to come back, and if we can get back to that 50% retracement level, that's going to be the daily time frame Kijinsen. So we'll look for that on the 4-hour time frame. All right, but looks like we're at the previous month's high. So this is the previous month's high. We just broke that, and then you have your previous week's high. This is where that's set at right now. This is going to be the previous week's high. So price needs to get above these levels here to look for anything long, or else we're going to wait for the pullback. We're not going to take anything just right here. We want to see price show us what it's going to do. It needs to break this level, needs to show us that it's going to hold this as support, or it's not going to hold and it's going to come back and retrace maybe down to this level. So we'll go to the 4-hour time frame, see what that looks like. That may show you a little better opportunities. So now on the 4-hour time frame, what we would look for basically is for price to pull back. All right, I don't know if this level is going to hold. Okay, this is that monthly time frame. This is the monthly previous month high, and where is that sitting at? That's sitting at 94.47. Okay, so 94.47, the market's showing that as support there. Then you got your previous week's high, and that's sitting at what's that? Sitting at 94.66. All right, so we need the market to break that level, and we need it to hold this level to take a trade. Now if the market doesn't hold here and it breaks below this level, then here's where you come into your support level with your Kijinsen, and then you get that bounce here. So what you'll want to see, usually the market's gonna consolidate, range trade for a little while. Your Kijinsen will flatten out, then we get a pullback to that Kijinsen, and then the first mark after the pullback, and you get a green candle to close of that green candle, we want to get in, put that stop loss below that Kijinsen. So we're looking for something to pull back to this level. If not, we're going to look for a trade off of this level, off the bounce of this level and the break of this previous week's high. We like to see that and then hold those levels as support. Now with price coming down here, if we don't hold this level, it doesn't honor that level and violates. If it violates this level, then you have the cloud to contend with as support. All right, and if it doesn't hold as support, here we go again with our daily Kijinsen. So here's the daily Kijinsen. Anything breaking below that for sure will definitely show us some weakness, and we'll take a short trade. You'll probably be on the other side of the Kumo by then anyway. So always move your always move your daily Kijinsen level so you know where that is when you're on a 4 hour time frame, because this may not be our level that we're looking at in a week or two once it starts moving. Okay, so here we are with the pound yen monthly time frame, and just again showing that we're coming off of this all-time low here, and this low comes in at 117.26. All right, and then the market pulled up, the market trended upwards, and now on the monthly time frame we're inside the cloud. So there's a possibility that the market could move back down to this 50% retracement level. Always, you can always pull back to the highest time frame is going to be the strongest levels. So there's always a possibility that we could pull back to this level here, which is your monthly Kijinsen, and that's sitting at like 138.39, and I don't really expect to come back that far. So let's go to the daily time frame. And on the daily time frame, our bias is going to be bullish. We're going to look for something long, but I don't like the way the market's setting up here. You can see all this volatility. You can see how thick the Kumo is. I mean, how thick our Kumo is, and you can see above the Kijinsen that we're above the Kijinsen. So breaking above that Kijinsen, we're still bullish, but just looking at the price action of the market and seeing what the market's doing, looks like it's setting up that range for us. And a lot of times you'll get that move upwards, and you can probably see it here. You see it on a lot of it. You see it here. We moved up and then we got into a slight range, not a big range here. Then we moved up and then we got into a very good range here. All right, so this was a longer range, and then the market moved up. Now usually when you get into the longer your range, probably the stronger your move is going to be upwards or downwards, whichever way the market moves. So it looks like it's setting up again to make that range, and then a lot of times when it ranges it may break below or break high. We don't know which way it's going to go. So you see here we got your daily Kijinsen right here. All right, so that's going to be holding that support when we look at our 4 hour time frame. And you got your previous week's high, and you got your previous month's high here. So your previous month's high comes in at about what level is this going to be? 159.94, and your previous week's high comes in at 158.63, somewhere in that level. So let's go to the 4 hour time frame. Now on the 4 hour time frame, what we're going to wait for is to see if price can pull back to this level. If not, we want to see price break this previous week's high level. We don't want to get too far away from the Kijinsen to get into the trade. So as the market breaks the fractal levels, we're going to get our trade in, and then we're going to have to put our stop loss. We can put our stop loss below the bottom of the last fractal, the bearish fractal, or else we couldn't put it below the Kijinsen, a little bit farther away. But always know we can come back to this level. This is going to be the daily time frame Kijinsen, so that's going to be a level that we can also pull back to. So what we'll look for is to pull back to this level first. If not, you can see this is going to be some support levels here with your fractal levels. A lot of times when the market's moving upwards, it won't break this bearish fractal. It won't break that fractal. It'll hold that fractal as support, and if it does break it, it doesn't break it much, and it sets another fractal. So you have a fractal level down here, and then the market continues upwards. So if you're not sure and you don't get that move that you like, once you see the market showing some momentum and breaks through this level here, which is your previous week's high, which I said comes in at 158.66, you break that level, and then you get into your trade. Put your stop loss below your fractal, or you can put your stop loss. You can be a little more tighter with your stop loss and put it below that candle. So there's a lot of things you could do with your stop losses. I'm not going to tell you guys how to do your stop loss. I'm going to just tell you how I'm doing mine. You have to realize what your money management is and how much you can risk on a trade, and if the stop loss is too big. You don't want to just put a really small stop loss that has no value or meaning, because then you don't give the market room to move, and then it takes you out, and then it goes back up the other way that it was going to go. So you really need to have a more technical sound stop loss. All right, so that's the pound yen 4 hour time frame. I'm looking for a market to pull back to this level. If not, I'm going to set a level here, and I would set a level here and know that if we pull back to this level and bounce off of this level, this fractal level at 158, then we can get into a trade long again also. All right, and we'll look to ride it up to this level. This is the previous week's high, the previous month's high. We'll ride up to that level and see what happens then. If we break that level, then we can continue with our trade. And finally, the last pair we're looking at is the New Zealand dollar yen. We're looking at a lot of these yen pairs. You can see this high here. This is the high, all-time high for the pair, and it looks like it's at 97.76, and we're not near that. And you can see here the market moved up, broke out of the Kumo, and now you may range on the monthly time frame for a while, but the monthly range is going to be very big, which is nice trends on the daily and the 4 hour time frame. So let's go to the daily, and looking at that daily time frame, here's our Kijinsen. That's going to be our support level. So we know that the market has a possibility that we can pull back to that level. So that may be a level. You can see the thickness of the cloud. This is showing you a lot of volatility in the market right now. So no definite trend. You can see where the Kijinsen it flattened out and looks like it started to move downwards. So there's some bearish weakness here. We bounced off of this level here. This is your previous week's high, and then you got your previous month's high right near that. So we came back up pretty close to the previous month's high. We had 83.66. We didn't break it, and we set this new level for the previous week high at 83.46. So just know where your daily Kijinsen is, because you can always pull back to that level. So going on the 4 hour time frame, we're going to look for something long. I don't like the way this is set up here. I see this range here, and it looks like there's a possibility. This looks like a little flag formation. I want to get above this level before I feel safe about a really long trade, but the market may range for a while and establish a support level down here. You have this support level right here, which is going to be your Kijinsen again, and then you have all this cloud, this very thick cloud. So once the market moves back to this level, then maybe we could look again, like I said, always looking to get the bounce off of the Kijinsen. And if it doesn't pull back that far, then we may wait. But if we break this level here, I don't think it'd be a good idea to get into the trade. Now you can see we had a double top here because the market moved up, made this level, came back down, and went up to that level again. So you had that double top right where you made that previous week's high at 83.46. Now we need to break that level, but if we break that level, we're sitting right up against that previous month high. So making a trade in here, you want to get above that level, because you're too tight. You know, the market could hold here and come back down. Your trade will be down. Your trade won't work out. So you want to make sure that the market has the momentum to get through that level. All right, so once the market's pulling back to this level, if the market pulls back here and bounces off of the keys, then yes, I'll take the trade. But if it doesn't pull back any farther than what it is now, and it continues upwards and breaks this level here, I'm going to be cautious, because I have nothing below me to help me as support. It's this far away, my Kijinsen, and look how far my resistance is. So my support is farther away than my resistance, and you don't want that. You want your support to be close. You want your resistance to be farther in a long trade than your support. You want to be as close to your support as possible once you get into the trade, if you're going long, and you want your resistance to be as far away as possible. Now here it's very close to us, so but if we get here, we can take the trade off of the bounce of this level, which comes in at about 82.73. So we'll get the bounce here, and then we can take the trade up to this level, see if we can break this level, violate through there, and then continue higher. If not, we're going to look at this thick cloud and see if that price comes down to the Kijinsen. Now you'll have that thick cloud. You can probably see we may, if you get the thick cloud here and it continues to have this volatility, it's going to set this probably a flat bottom cloud here, right almost along with this Kijinsen here, this daily Kijinsen. So you'll set this strong support level, break below that level, then you're going to take this short trade and monitor your trade and continue downwards to each level. So that's looking at the pairs that I'm looking at and looking at the opportunities. That's the New Zealand dollar yen 4 hour time frame. Those are the pairs I'm looking at, and hopefully that helped you guys. Hopefully you can find some trading opportunities. There's other pairs that I haven't looked at. I just looked at the pairs that I have there, and a couple other pairs that I don't see anything at all worth talking about. So you can look at some other pairs maybe and see if you see anything. Just remember the fundamental things that I'm showing you, and you'll be all right. Remember about your money management, the most important thing in trading. All right, and then just remember about placing your stop losses in the areas that are more technically sound, where the market has a possibility to move back. Give the market some room, but also remember about your money management. All right, traders, hopefully that's helping you guys, and until next time, God bless. So long.